Okay, good afternoon, everybody. Welcome to the weekly take on the market. I will be your host. My name is Scott St. Clair. I am the manager of the Premium Product Group here at Investors Business Daily. Let's take a moment to look at the disclaimer. I'm not licensed. Nobody at IBD is licensed. We don't make buy, sell, hold recommendations. Don't tell you which stocks you should buy or what your allocation should be. Kind of our circle of competence is research and education. That being said, one of the great perks of working here is you can have skin in the game. You can invest for yourself. So that was a big deal for me when I came on board many moons ago. So let's look at the market indices first. Then we'll do the industry groups, and then a handful of stocks, and then the quarter of the week. So you know the drill, pretty much the same. So here is a chart of the NASDAQ. It is 1:15 my time. Market's been closed 15 minutes, so it should be pretty close. The volume won't be accurate at this very moment, but it gives you a pretty good idea. Say it was another strong day in the market. Obviously, it tried to go lower initially and then spent the rest of the day going higher, which is really good action. Like you would expect a little bit, at least a little bit give back after yesterday's monster move. So, it's hard to argue with that. I haven't looked. I'm presuming that IBD went to resumed uptrend yesterday. We're working on some things, hopefully, that we can be more flexible. Or when I say we, I mean them. Versus kind of having a 3-tiered stool. It'd be nice if we had an 8-tiered stool, but it is what it is. So they're using the system. It's very mechanical, and I would say it's low on the totem pole as far as my allocation. I know the market is very important. A couple of people have emailed me and saying, if you don't use the M in Can Slim, what are you supposed to use? It's not that black and white. I use, leadership. Are there stocks to buy? Are there stocks that I wish I owned? That's a big deal for me. If there's stocks that are going up that I should own and don't own, I take that into account. And then how I'm doing on the year. If you're having a good year, I think you can be more aggressive. You should always try to be a pig when you're doing well. And if you're not doing well, then you need to pull back. So that is a big influence on me as well. It's a very strange year for sure. I bet there's people on both sides of the spectrum as far as performance this year, doing very poorly and then doing very well. It just kind of depends on where you're allocated. Energy has been gangbusters this year, and FANG and tech and SaaS, software service, cloud stocks, let's call it like it is, horrendous, really bad. So, it's hard to know. I'd like to go with what's working. I'm a big proponent of relative strength. And so, the energy stocks have shown that relative strength. It's not my favorite trades. I'd rather have a software company with, 52% margins and earnings last quarter up 82%, but I can't force the market to give me what I, want. I've just got to kind of go with what's there. So if this has been a survival year. I know I've said that a handful of times, but for most of you out there, hopefully you've survived this year. And if you did, then you've done a great job. And what I mean by survive is, you're down. I would say if you're down 10, 15, 17% on the year, you've survived it. Once you get, the math is cruel. Once you get down 25% to fill in that hole, it takes 33% coming back, which is not that easy. And then you get down, more than that, 30% or so, the math is just so much harder. You get down 50%, you got to double your money to get even, which is why I don't like to, I graph my portfolio equity, and I don't like to stay too far off of the highs if I can help it. Now, in a roaring bull market, that will hurt me. To be totally honest with you, in 2017, I think it was, I think the NASDAQ did 30-some%, and I did like 5% less than the NASDAQ because when the going was good, I would take some off, and the market never pulled back. So, that's fine. I don't mind. I think it was this period study the market was back then, and so that's fine to me. I don't mind. I would love to have that problem every year. So that's my 2 cents multiplied a bunch of times as far as the can slim system. And once, I might have told this story before, but just in case, Bill at a seminar, Bill O'Neill said, I should have called it, I should have put the M in front because it's so important. And it has been important this year for sure. The M has been a disaster for 80% of the stocks out there. It was just the other stocks that ignored the M on the way up. They ignored the M when it was going down this year, energy stocks, stuff like that. So, but yeah, the M is important. So I don't want to give up on it, but I put more weighting in leadership, stocks I own, stocks I wish I own, if there are any. Am I in sync? Am I making progress? Because if I am, then I want to keep, pressing. Let's look at the S&P. So same thing. You're getting close to this 200-day moving average. You poked your head above it there. Couldn't quite get there this time. We'll see. We'll see how it does here. We're in this seasonality too, which is good for us. And also the market is kind of ignored the bad news. The crypto is just burning down, and the market has kind of basically said we don't care. So that's fine. That's good. I mean, I've never been a crypto guy. I've never owned a single Bitcoin or anything like. In fact, I'll admit that I've never been long Bitcoin, but I've been short it with the many futures contracts that TD Ameritrade has. So I'm a skeptic. Color me a skeptic. I've always felt like if it's too good to be true, it is. That saying has existed for a long, long time. And it's held its own for centuries. So if you're young, most of us old veterans out there, know that. But if you're young, it's hard for you to kind of see that. But I've always been, skeptical of those types of things. I might participate a little bit, but not in crypto. If I can't put it in my brokerage account, where there's some type of protection at least, or my bank account, then it ain't going in my account. And the old adage, have fun staying poor, that was fun, and that's fine. I stayed poor for a long time without it, and now I don't have the issues that some of them have. So I would guess most of us have not participated in that area, but maybe some of you have. But I got off track a little bit. The main thing I wanted to say is the market has, sort of ignored that news. The news was, there was more bad news in that space today, and the market went up. As far as the CPI number on Thursday, I'm more concerned with the reaction than the number. So I know the number was 7.7, I believe, but I honestly don't know if that was above or below expectations. I don't know. I'm guessing it was below expectations because the market went up, but not in my my rules of things that I worry about. I just let the market vote, and they voted. They stampeded into stocks. Now, historically, big up days tend to occur in bear markets. So, the NASDAQ was up 7% yesterday, which is just, I think it was like the 14th or 15th best day. It was in the top 15. But usually what you get, these type of rallies uh, usually occur after waterfalls. So I know in 2000, we had a lot of those types of days. But like, let's see here, the NAS. So here's the NASDAQ is up 7% that day. And I've changed the chart where this is November 2000. And the NASDAQ is up 6.5% that day. But look, it went down. It drives me nuts, this mouse sometimes, but went down 5, 3, 7, 2.5, 9. That, and then, so it's like a coiled spring, you know, for it to bounce back. Look at all these days down in a row, and then you get this day up 7.87%. This is really just off the lows. So that's usually how you get those really big days, you know, where the market's been down so much. Wow, look at that day, 14%. I think that was the day. Well, I don't know. I'd have to look, but I remember there was a day intraday where the Fed cut interest rates. Maybe that was the day. 14% seems like some kind of news event. So that's usually how you get those days, and that wasn't really the case with this current market. You know, you had a bad day here, down 3%, but you know, that's nothing compared to some of those waterfall declines. So, you know, if you got 7% after this, that's 3. That one is, you know, it's 2.5. It's not really that big. That's usually typical. So I don't know what to make of yesterday's action. I really don't. I don't know what to make. I am not short anything anymore. I've covered all my shorts, and I don't think this might be the first day in 2022 today where I was not short anything at all. I would have to look, but I feel like I've had always at least something short. And we can pull up Tesla. I covered it just for a number of reasons. It just feels like the market wants to go higher, and I don't want to sit on the railroad tracks. And if I'm wrong, I'll find a spot to put it back on. So VTV was an ETF that I've owned, and you can see how strong it's been. Where's the relative strength? Why did it go away? It's 73. Here is HEWJ, which is Japan. And coming out of this, well, maybe, but looks like it might be coming out of this really long base. Interesting. And today, emerging markets had it, although yesterday was good as well, but they had some follow through day as well today, up almost 3%. And this is the first weekly close, significant weekly close above the 10-week line since it topped in February of 2021. Now, I know that that's a close above, and maybe a couple of those are a close above, but this is probably the highest it's been. So we're 5% above the 10-week, and I would be willing to bet it's never been that far above the 10-week since February of 2021. Long time ago. So I didn't buy this today. I was tempted to buy it. We'll see if it can go sideways a little bit. I don't usually like to buy ETFs. I prefer to buy individual stocks. So I want to own the leader if I can try to identify it. But sometimes it might be a little bit harder to identify the leader. So if you like mutual funds, VTV, HEDJ, EEM, there's stuff. I'm sorry, I said mutual funds. I meant ETFs. There's stuff out there. There's stuff out there that that you can participate in. All right, let's look at. Now I pulled this from Sentiment Trader on Twitter. This chart might be 5-6 days old, so keep that in mind. But it looked like people are really trying to buy insurance, and they're paying too much for it. The premium for puts versus calls is 2.5 times at this peak. You can see in 2009, Oh, right here, it was around 1 3/4 roughly. In 03, around 1 1/4. In 17-ish, 18. Oops. That's a little bit hard to explain kind of the reasoning behind that, but you can see that anything above 1 looks like they're paying too much when you think about like where the market's gone. So this really jumped out at me. And then this chart on bear markets. So they have the start date for the this bear market, January 3rd, 2022, and the end date, June 13th, 2022. I can't explain that. I don't know why that's, their start date and their end date is there, but it's more, what I wanted to, because I think the jury's still out on our market currently, but really wanted to grab this data so you can see some previous bear markets and their length. So, and one of the things about this bear market is the jury is out on where the bear market started. I think it started in February of 21 when ARK topped and a lot of high growth mutual funds topped. I think the indexes really topped probably November of 2021. But the S&P made a new high and the NASDAQ didn't. So you had that divergence there. So, it's where you're going to start it, where you're going to end it, but you can see kind of the move down and the length of time. So, the average bear market is 11 months long and corrects 30%. Let me pull up the S&P. So I think the bear market started, and it's, I didn't know it did at the time, but so you got to go back and look here. That's where the bear market started, I think. And I think I have a lot of evidence to say so. So I'm going to go with that. The S&P. So here's where they have their top and, here. So if this is the low, but as far as the percentage down, the SPY, I'm gonna is 17%. I think it bottomed around 22, 23%. And you've got what, about a year? So as far as the S&P, you're a little bit less as far as change on the average, but right there as far as length. So, and in the end, this is all just kind of for fun, to be honest with you. Just because something's happened 10 other times throughout history doesn't mean it has to happen that way. But I mean, you want to keep that in your back of your mind, especially for someone like me who's historically in 03 and in 09 had a hard time turning the switch, turning bullish when things were changing because it had been bearish for so long. So this is how I'm trying to keep myself, on target that this will change. It will switch. We will get a bull market again. I don't know when, but it will definitely happen, and I don't want to get caught flat-footed again. Equity flows. The U.S. has always been the place, which is kind of interesting where you had emerging markets, the ETF turning up, but all the money has gone to the U.S. And I think one day that will change as far as, people will start investing in Europe and Asia again. But it's been a one-way freight train. And this is probably from a macro standpoint, forgive me, but this is probably, why the dollar's been so strong. And, this whole dollar thing has caused a lot of havoc throughout the world. That's about all that I'll say about that, is because I don't think it's worth it as far as trading. And where the dollar's going is not something I'm going to trade. All right, let's look at the industry groups. What am I doing wrong here? Here we go. All right, let's pull this to the top. We got Oil and Gas Royalty Trust, not a surprise. Field Services. So Tidewater, Schlumberger, good names there. Energy Solar, I feel like Energy Solar is losing its luster. And today was a clue. I'll pull up a couple of those stocks, Enphase and First Solar. But it's been number one for so long that it's not surprising that it's kind of losing its luster. Oil and gas, transportation, electric contract manufacturers, not a lot of stocks, 15 of them, enough. Education, interesting, 42 stocks in there. Finance investment brokers. So I feel like Goldman Sachs has held up well. And on IBD Live, somebody mentioned Interactive Brokers and Charles Schwab. And I don't know if I would buy them, but they sure have held up pretty well. Computer networking, banks. So there's a plethora of different stuff. Security software. This is not like cybersecurity. This is like Taser, the old Taser, or maybe prisons. For-profit prisons might be in this group. And I think there was one that broke out a few days ago. So you get the idea. It looks like it's becoming more diverse, which would be very interesting and better, more options rather than all oil and gas or all solar or whatever it might be. Okay, stocks to watch, and then we'll do the quote. And so I did EEM. That was one I went. ASML is so when I talk about the M in what do I use and how stocks I own are doing, how stocks I wished I owned are doing. I owned this one and just got shaken out because of the CPI number. I normally would never do anything in front of a CPI number. It's like ludicrous to me, and I really am kind of upset at myself for doing that because normally I wouldn't even know there was a CPI number coming out. It's just not worth spending energy on. But it felt like the whole world was waiting with bated breath for this number, and I just felt like there was a lot of risk and reward. Obviously, a big move in the market. And so I stepped aside, unfortunately. And so this is one that helps me to I have serious FOMO on this one because I really identified it really well. And that's a huge weekly bar, up 22% on the week. So the airball by me, I made money in the stock, but look, I should still be in it. So I think Bill would always say is it's not the losses that hurt you if you're cutting losses. It's when you identify one and you get a hold of one and you get shaken out. He used to tell that to the portfolio managers all the time. And I feel, on this one, exactly like that's exactly what he would be telling me if I was running his portfolio for him and he saw that. He'd be, wouldn't want to get a phone call from him, as the guys like to say. ACLS is in that same group. I still do own this one. So just acting, look at that weekly bar up 18% on the week. I know Paterex says it's a cup with handle, but I had it as a double bottom, and I love to buy shakeouts. I want to find the best companies. Look at the earnings and sales on this one. Everything is superb on it, at least so far, but I want to buy the best companies, and then I love when they shake out. So that to me is where where I went with it. And I had shorts, like I was short Tesla and Carvana and Apple. So if I get this wrong, it's not going to hurt me, and that's nice to have that kind of freedom to just go ahead and put on a trade and give it a chance to work. So this one looks very good to me. Now it's, I think I was in it here, and I don't think I bought this one. I feel like I bought it somewhere else. Maybe it was here. It definitely was in this move here. I remember that one. That week was huge and it just kind of petered out. So it doesn't tend to break out, although this breakout worked and this one worked, but the last two haven't worked, but that's the market. Maybe the market is changing. So maybe the breakout will work. So interesting name to me. And there's another one, it's Laser Tech, which is a Japanese company, which just exploded out of its base. That's another one that I own. Now, I'm in the process of trying to get William O'Neill and company to fill in the data because this is it's not an ADR. It trades on the old bulletin board, and it's a Japanese semiconductor stock. So very interesting that ASML, Laser Tech in Japan, ACLS, NVIDIA's shaping up, although I didn't buy that one, are shaping up. And these are CanSlim type, growth stocks that we would want to gravitate to. And look at this power. It just, when you see that kind of power, it's like a volleyball being held underwater, and the only thing keeping it down is the market. And as soon as the market, as soon as the pressure from the market was released, like it was trying to go up before, but when that pressure came off, look at yesterday, up 12%, and then today up 13%. So just huge move coming out of this space. Now, it's not an IPO. They have a lot more history. I looked it up on Panerai. It's been around for a while. It's just I think it's new listing to the bulletin board here in the US. So keep that in mind. Now, some brokers might not let you buy this one because it's on a bulletin board. It's very extended, but it's stock to watch because of the action when I see that type of strength, especially in a group like semis. So those are the ones that are really good. As far as Tidewater is acting really well coming out of this space, which is in the oil and gas field services. Schlumberger acting really well, brand new high basically. And then the others that aren't. So Enphase looks tired, try to break out. Today, I apologize. I thought it was down yesterday, and then so I was trying to make sure I had the right date. But yeah, tried to break out today and gave it all back, especially in the end of the day, it just bled to death. So, and then First Solar, not as bad, hanging in there, looks much better. But the group's been strong for so long. What happens in a day like yesterday and Thursday is the first things that go up is the junk. And, I say that with all due respect, but, Twilio was up. You can't even see, but it was up 16% yesterday. Carvana, can't even see, but it was up 31% yesterday. So that's what happens. They run to all that stuff, and the leaders usually pull back. So stuff that's been holding up, like Amgen, you can see it hasn't gone up in the last couple of days. It's actually gone down a little bit. It's not doing anything wrong, but the money stops going to those, and it's a rush to get into these stocks off the bottom. DraftKings was up 17% yesterday, and I just saw it across the board. Everything that looks totally broken was up huge yesterday. MDB 17%. So that it's a rush to get into those. Now, if the market is real, I think these stocks will come down. They'll go sideways to down, and if they're real, if they're good companies, they'll come back slowly. They won't go up the way they've been going up. But then the market will finally gravitate to the leadership. So I prefer to buy. They don't make as much, of course, but I'd rather buy the stocks like ASML, although that's kind of, off the highs as well. But ACLS, much closer to new highs. Laser Tech, brand new highs. Schlumberger, brand new highs. Tidewater, close to new highs, stuff like that. Last but not least, Shockwave tried to break out and couldn't. So breakouts are a little tricky still. It'll be a good clue going forward if we start to get some breakouts and if they can hold. All right, the quote of the week: unknown market wizards. I know I've mentioned it, but I love the Market Wizards series. I've read them all. Unknown Market Wizards is the newest one, and I've been rereading it. And this guy's quote is stuck out to me. Most crucial thing in trading is mental capital. You need to be in the right headspace. I find that when I go into a deep drawdown, my mindset is not right. I might start forcing trades to try to make money, or you might get gun shy about taking the next trade. So you have to protect your mental capital. And a lot of times, if you're, it starts with a small loss that becomes a medium loss, which is hard to take, which becomes a large loss, which you're forced to take. And then you've drained all your mental capital watching that stock. So the key, I think, to protecting mental capital is just small losses. Even if you get nicked up here and there, nicked up, you'll keep that mental capital pretty full. And you need it, because if you hate the stock market, you're not watching, I can't make any money. You start telling yourself that, you say things like that, then it's going to be true. What you tell yourself will turn out to be true, and then you'll miss the next trade. So there's always another out there. As long as the stock market exists, there's another Apple, there's another Google, there's another Microsoft. It's out there. I'm pretty certain I'm not going to handle it correctly, the way that, like a Microsoft or a Google or an Apple. But boy, if I can catch a portion of that move, that's good enough for me. So I'm big on protecting mental capital. All right, Marcus Smith at investors.com, 800-424-9033, and Twitter if interested. Thanks a lot. Have a great weekend. And is next, maybe I love Thanksgiving week. It's one of my favorite weeks. Football, food, and the markets open half day one day and close the next, or closed on Thursday and open half day on Friday. We need more half days and closes in the market. I don't know why the New York Stock Exchange couldn't just be closed today. So that's me on my soapbox. We need more holidays. So, but yeah, this is a great time of year. I love the Thanksgiving week. So that's not next week, I think, but it's the following week. So I will have another take on the market next week. Have a great weekend. Thanks, everybody. Bye-bye.